welcome to another edition of Calculating the Annual Percentage Rates of ETFs. I'm your host, Dr. B. This is episode 8, November 24th, 2024. And today we're going to do something a little bit different. As you may be aware, in the news recently, Bitcoin has gone over $90,000. Approximately, actually, as of date, it's up to around $99,000. So we're going to hold on for dear life. That's what HODL stands for. This is the Van Eck Bitcoin ETF we're going to profile today. The investment objective is to reflect the performance of Bitcoin's price, minus the operational expenses of the trust. Essentially, this trust seeks to provide exposure to Bitcoin's price movements. Holding Bitcoin, the trust directly holds Bitcoin as its underlying agent or asset. This means investors in the trust are exposed to Bitcoin's price performance without needing to directly purchase and store Bitcoin themselves. Valuation, the trust shares are valued daily based on the market vector Bitcoin benchmark rate. This is a reference rate for Bitcoin's price, which is likely derived from various Bitcoin exchanges and trading platforms, providing an accurate, transparent benchmark for the asset's value. Again, this is an ETF. The creation and redemption. The trust operates with authorized participants who can create new shares of the trust or redeem existing shares. These participants are typically institutional investors or large firm entities that deal directly with the trust to inject capital in the form of Bitcoin or withdraw it. Expenses. Like any investment product, there will be a management fee or operational costs involved, which are deducted from the performance of the trust or ETF. This ETF's objective is to reflect Bitcoin's price less these expenses. To date, the expenses are 0.20%, if and only if the total capital is $1.5 billion or more. You can look that up yourself, but I believe to date it's about $1.3 billion. So if you're a current investor of HODL, you're not paying any expenses so far. This type of investment product offers a way for investors to gain exposure to Bitcoin in a more traditional financial product structure, avoiding the complexities of directly handling the cryptocurrency itself, such as custodial or wallet management. I never really knew how to get into Bitcoin, didn't really want to. I thought it might have been a fad, just like many other investors, but this is no fad. This is real. Now, what is Bitcoin based upon, or Hodl based upon? So let's look at a few things. Let's look at the sectors, which I like to start off with. It's very little in basic materials. 3% consumer cyclical. Financial services, yes, it's a financial service, 57.8%. Not much in real estate at all. There's communication involved between the technology products, or the blockchain, we should say, 4.79%. Very little energy is being used. Industrials, 2%, but it's technology based, technology driven, 31%. Now, HODL, once again, that stands for hold on for dear life. So if you started investing when this Bitcoin ETF came out back in January, if you had $10,000 to invest in, it would be worth $21,340. But not many people are going to take a risk on $10,000 on something brand new. And we're going to explain later on how much this investment went up and how much, if you would have dollar cost average this investment or another investment similar to HODL. So we're not going to be doing this over a 10-year basis. That wouldn't make any sense at all, because this is a brand new investment that came out in January 12, 2024. But since then, if you would have invested, let's say $10,000 worth, your money, wherever you invested $10,000 or $5,000, that initial investment is up 114.75%. And of course, this is from Morningstar.com. As you have watched my previous episodes, I get a lot of these charts from Morningstar.com. I don't make these up myself. So the price as of, let's see, November 20th is $106.56. But as I'm recording this on November 24th to air on November 24th, the price of HODL is $112.36. Now, it only has one. Oh, there I am. Okay, let's once again, for a second or third time, hold on for dear life. The holdings, there's only one holding. CFD 2099 1231. Here's your homework assignment. Go figure out what that means. Now, again, this information is from Morningstar.com. First bought back on February 24, 2024. I believe you could have bought this back in January. Again, according to some getting a little mixed research. Any event, the market value according to Morningstar as of November 16th, there's $1.2 billion in this ETF. Once the ETF gets to $1.5 billion, then a 0.20 expense will take effect. Back on November 20th, the price went to $106.56. But if you bought this when it first came out for $49.42, you would have a profit of $57.14 or $57.14. Excuse me. Now I'm getting ahead of myself. What does that mean as a percentage? Well, if you take how much it went up, divide by the original price of $49.42, then multiply by 100, then you have a percent gain of $115.62. But many people will not put all their money into their basket at one time or put $10,000 or $5,000 into one ETF or new ETF at one time. They do something called dollar cost averaging, which I do. So by doing so, I'm showing you some personal information here. Yes, look at the bottom. I spent $67.90 on average for this ETF. It went up $44.48. So if you go back and look at the closing date of November 22nd, the price of Hodl is $112.38. So I have a profit of 65.50%. But wait, there's more. What's this above here? ETFs? What is that? Well, I bought that at an average of $41.92, and that went up $6.29, and that's 15%. But what is that? I'll explain what that is. That's the Ethereum ETF from Van Eck. So this is a daily chart of Ethereum from July 23rd, 2024 to November 20th, 2024. Once again, past performance doesn't indicate future results. Hodl started going up slowly over time. This ETF, the Ethereum, went down right away in August and peaked a little bit, then went back down further in September, then went back up, and then down again in October, then back up, then down again beginning in November, and then came the election, and what happened? It shot up. So, dollar cost averaging, ladies and gentlemen, is a significant way to invest. It takes a lot of discipline. It's not easy, and sometimes you may want to hire a certified financial planner to do it for you if you don't have the discipline. So what you want to do is pick a day of the month. So when this ETF first came out, now we're referring to ETHV, Ethereum ETF from Van Eck, on July 24th, let's say you bought this at $50 a share exactly. I try to buy things personally to the nearest dollar or nearest half dollar. It doesn't always work out that way. And then on August 23rd, here are the opening, high, low, and close prices. And let's say you bought it for $39 that day on August 23rd. And then a month later, here are the open, high, low, and close prices for ETHV. And let's say you bought again for $39 a share. And then here are the prices for October 24th. And let's say you bought it at $37 a share. So we're dollar cost averaging. So you're not spending $50 every month for this. You're spending a lot less. And if it goes up, you're going to make some money. And on November 22nd, the price went a lot higher. And let's say you bought it at $48.20. You're being a disciplined investor. You're spending the same amount or same number of shares every month. So let's say your total cost is $213.20 based on buying one share per month. So the closing price for November 22nd, 2024, let's say was $48.21. That's what it says here, according to, this is actually Yahoo Finance. So if you multiply it by 5 shares, that means your revenue is $241.05. So if you subtract it by your cost, you get a profit or a loss. So your cost is $213.20, which means you have a profit of $27.85. And if you divide it by what it cost you, multiply by 100, that means your gain is 13.06%. That's not a bad gain. Once again, past performance does not equal future results. So like anything, be careful what you're buying. Okay? This is still something new. As my certified financial planner would tell me, this is still the wild, wild west. We hope this goes up, but like anything, ETFs and any kind of stock will go down in price. We just don't know how much it's going to. Thank you very much for watching the video, and please go back and look at my former videos back on, the 22nd, 23rd, 24th of each month previously. Once again, if you're new to my channel, my first video came out on April 22nd to 24th. All right, take care. I'll be back again next December, or this December coming up, with another special video. Thank you again for watching. Take care.